Q, right now, while you are watching this, there is a very real chance that money is being quietly removed from your Social Security payment every single month. Not through fraud, not through any mistake, but legally, silently, and in most cases completely without reason. And the solution comes down to one single form that most seniors have never heard of and almost never file. If you are 65 or older, by the end of this video, you will know exactly what this form is, who qualifies, how to file it, and what it could put back into your monthly check. We are talking about $200, $300, even $500 or more returning every single month. Here is what is actually happening. When you retire, the federal government does not immediately update what you pay for Medicare to reflect your new lower income. Instead, they look backward 2 full years, and whatever your income was during that period is what they use to calculate your current Medicare premium. If you retired last year, your most recent tax return showed your final full working year, possibly your highest earning year in decades. That is the number Medicare is using right now. Not what you earn today, not your retirement income, but a salary from a job you no longer have. The extra charge added to your Medicare premium because of your income is called IRMAA, the Income-Related Monthly Adjustment Amount. In 2026, those surcharges range from $81 to nearly $500 per month, added directly on top of the standard Part B premium and pulled straight from your Social Security check before you ever see a single dollar. My name's Mason Parker. For over a decade, I have studied retirement benefits, senior tax programs, and the financial rules that affect older Americans every year. Today I am walking you through IRMAA, the form that corrects it, and 2 additional 2026 developments that could significantly change your monthly income. Before we continue, subscribe right now and turn on the bell. The seniors on this channel find out about rules like this before they spend years making unnecessary overpayments. Hit subscribe and let us get into this. How the surcharge actually works. Your 2026 Medicare premiums are based on your 2024 tax return. If you retired in 2025, your 2024 income was your last full year of employment, potentially your strongest earning year in a very long time. Medicare reviewed that return and set your premiums accordingly. Not your current retirement income, not what you are actually living on today, but wages from a position you no longer hold. And Medicare is not going to call you to ask whether your income has dropped. They will keep charging you the higher premium using 2-year-old data until it naturally updates through the look-back cycle, which can take another full year or longer on its own, unless you file the form. In 2026, the standard Medicare Part B premium is $222.90 per month. The IRMAA surcharge begins when your 2024 modified adjusted gross income exceeds $190,000 as a single filer or $218,000 as a married couple filing jointly. Here is an important 2026 update most seniors have not heard. The IRMAA entry threshold increased from $160,000 in 2025 to $190,000 in 2026. That means any senior whose 2024 income landed between those 2 figures is no longer subject to any surcharge in 2026, even if they were paying one last year. If that describes your situation, check your current Medicare premium immediately. You may have dropped out of the surcharge entirely without anyone telling you. For single filers above $190,000, the surcharges by tier are as follows. Tier 1 adds $81.20 per month, bringing your total Part B to $304.10. Tier 2 adds $222.90 monthly. Tier 3 adds $324.60. Tier 4 adds $446.30. Tier 5 adds $487 per month. For married couples filing jointly, all income thresholds double exactly. One critical detail: the cliff rule. IRMAA is not a gradual scale. It operates as a cliff. $1 over any threshold triggers the complete surcharge for that entire tier. This same cliff structure works powerfully in your favour when you file the SSA 44, because dropping below a threshold eliminates the entire surcharge for that tier, not just a portion of it. And the surcharge does not stop at Part B. If you carry Medicare Part D prescription drug coverage, IRMAA applies there as well. The Part D surcharge in 2026 runs from $14.50 at Tier 1 to $91 at Tier 5, stacked on top of your Part B surcharge simultaneously. A single filer at Tier 2 is paying a combined $260.40 above standard premiums every month, which is $2,884 per year. On income they may no longer be earning at all. The form that fixes it. Everything covered above was the problem. This is the solution. The form is called the SSA 44. Its full official name is the Medicare Income-Related Monthly Adjustment Amount Life-Changing Events Form. It allows you to go directly to the Social Security Administration with documentation of a qualifying event that reduced your income and request that they recalculate your Medicare premium based on your current income, rather than the outdated 2-year-old return they are using now. You can download it completely free from ssa.gov. You do not need an attorney. You do not need a financial advisor. You do not need to pay anyone anything. The form takes roughly 15 minutes to complete. If your request is approved, your premium drops and the excess being pulled from your Social Security check returns as a permanent monthly adjustment, meaning a higher payment every single month going forward. In many cases, the SSA also issues a refund covering months you already overpaid in the current calendar year. The key phrase here is life-changing event. The SSA maintains a specific list of qualifying events, and this is where many people incorrectly assume they do not apply. Work stoppage, meaning retirement, is specifically listed and is by far the most commonly filed qualifying event. If you retired in 2024 or 2025, and your income is now substantially lower than your 2024 tax return showed, work stoppage is your qualifying event. Other qualifying events include marriage, divorce or annulment, death of a spouse, reduction in work hours, loss of income-producing property, and loss or reduction of pension income. One important thing most discussions skip entirely: voluntary income events do not qualify. A large Roth conversion that pushed you into an IRMAA tier is not a qualifying event. A significant capital gain from selling investments does not qualify either. The SSA requires the income reduction to result from an involuntary life circumstance, not a financial decision you made by choice. Knowing this before you file prevents a wasted submission and false expectations. You also do not need a completed tax return for the current year to file. The SSA 44 explicitly allows you to submit an estimated income figure. You need a reasonable and documented estimate of where your income will actually land, not a perfect finalized number. How to file, step by step. Step 1. Confirm you are paying an IRMAA surcharge. Log into your My Social Security account at ssa.gov and check your benefit details. If your Part B deduction is higher than $222.90 per month, IRMAA is the reason. Step 2. Go to ssa.gov and search SSA 44. Download the form at no charge. In Section 1, select your qualifying life-changing event and enter the exact date it occurred. For retirement, that is the precise date you officially stopped working. Step 3. In Section 2, provide income information from the tax year Medicare used. For 2026 surcharges, that is your 2024 return. Pull line 11 for adjusted gross income and line 2A for tax-exempt interest. Add them together to get your MAGI and enter that figure. Step 4. In Section 3, provide your estimated current income. List all sources including Social Security, pension, IRA withdrawals, investment income, and any part-time work. Be honest, thorough, and document everything clearly. Step 5. Gather supporting documents. For retirement, this typically means a letter from your former employer confirming your retirement date or a final pay stub showing when employment income ended. A brief signed personal statement is also acceptable if those documents are not available. Step 6. Submit your form. You have 3 options. File through your My Social Security account at ssa.gov, which is the fastest route. Call 1-800-772-1213 during business hours, or mail the completed form with documentation to your local Social Security office. Processing takes 30 to 90 days. If your first submission is denied, request a formal reconsideration. A first denial is never a final answer. The scam targeting seniors around this form. After a senior learns about the SSA 44, they sometimes receive a call from someone presenting themselves as a Medicare appeal specialist or an IRMAA reduction service, offering to handle the entire filing for a fee, sometimes several $100s, or a percentage of monthly savings going forward. Everything they are offering to do is completely free. Downloading the form is free. Filing it is free. Calling the SSA is free. No third party has any special access to this process. Anyone offering to manage your IRMAA appeal for money is running a scam. End that call immediately. The only legitimate number is 1-800-7721-213, and the only legitimate website is ssa.gov. 2 more 2026. Developments that could change your monthly income. The first is the senior bonus deduction and its direct connection to IRMAA. The One Big Beautiful Bill Act created a new additional federal deduction for seniors, $6,000 per person aged 65 or older, or $12,000 for married couples where both spouses are 65 or older. It is available for tax years 2025 through 2028. It stacks directly on top of your existing standard deduction and requires no itemizing whatsoever. Most coverage has focused only on the direct tax savings. A senior in the 22% bracket saving $6,000 of taxable income saves $1,320 in federal taxes. For a married couple, $12,000 shielded saves $2,640. But the connection most people miss is what this deduction does to future IRMAA premiums. Because IRMAA operates on a 2-year look back, the income you report in 2026 affects your Medicare premiums in 2028. A $6,000 reduction in your 2026 MAG from this deduction is a $6,000 reduction in the income Medicare will use to set your 2028 premium. For a senior with income sitting just above the IRMAA entry threshold, this deduction alone could eliminate the entire surcharge 2 years from now, saving over $1,000 annually, while also reducing their current tax bill simultaneously. The deduction phases out beginning at $100,000 for single filers and $200,000 for married couples, disappearing entirely at $150,000 and $250,000 respectively. For most retirees living on Social Security and modest investment income, the full deduction is available. If you already filed your 2025 return without this deduction applied, file Form 1040X to amend it. That refund will not arrive on its own. The second development is the Social Security Fairness Act. In January 2025, this landmark legislation was signed into law. For decades, 2 provisions called the Windfall Elimination Provision and the Government Pension Offset had quietly reduced or completely eliminated Social Security benefits for millions of Americans who worked in public service and also received a government pension. Teachers in many states, firefighters, police officers, and federal employees hired before 1984 were all affected. The Fairness Act permanently repealed both provisions, retroactive to January 2024. The average monthly increase for workers affected by the Windfall Elimination Provision is $360. For spouses affected by the government pension offset, the average increase is $700 monthly. For widows and widowers, the average increase reaches $1,190 per month. As of mid-2025, the SSA had already processed over 3.1 million payments, totaling $17 billion in retroactive benefits. But here is the critical piece. If you or your spouse never applied for Social Security spousal or survivor benefits because the government pension offset would have reduced the payment to zero, you may still be eligible to file a new application today. The automatic correction applied to people already receiving reduced benefits. People who never filed at all must submit a new application because no claim exists in the system to update. Every month without that application is a month of benefits that closes permanently. Call 1-800-7721-213 and ask specifically whether the Social Security Fairness Act affects your benefit or your late spouse's benefit. Do not assume the SSA already handled your situation. Your clear action plan. Action 1. Confirm whether you are currently paying an IRMAA surcharge. Log into ssa.gov and check your benefit statement. If your Part B deduction exceeds $222.90, IRMAA is running. If your 2024 income was below the threshold, call immediately. You may be paying a surcharge you no longer legally owe. Action 2. File Form SSA 44 this week if you qualify. If your income has dropped since 2024 due to retirement, death of a spouse, divorce, reduced work hours, or loss of pension income, download the form at ssa.gov today. Submit with an estimated income figure if your tax return is not yet finalised. Every month you delay is money that may not come back. If denied, request formal reconsideration. Action 3. Confirm the senior bonus deduction on your return. Make sure the $6,000 per person deduction is applied to your 2025 return and will carry forward to 2026. Ask your preparer directly. If you already filed without it, amend using Form 1040X. Remember, this deduction reduces not just your current tax bill, but the MAGI that sets your IRMAA premium 2 years from now. Action 4. If you worked in public service or are the surviving spouse of someone who did, call 1-800-7721-213 this week. Ask whether the Social Security Fairness Act affects your benefit. If you never applied for spousal or survivor benefits because the offset would have eliminated them, file a new application now. Every month without that application is a month of benefits that will not be recovered. The gap between what the system offers and what it actually explains is the entire reason this channel exists. The SSA sends the IRMAA notice, but never includes an explanation that a form to appeal it exists, or that most recently retired Americans qualify to use it. The people who find it are the ones who had someone explain it to them. That is what today was. Subscribe, turn on the notification bell, and share this with someone you know who retired in the last 2 years and has never checked whether they are overpaying their Medicare premium. That one conversation could be worth hundreds of dollars every month in their Social Security check. I will see you in the next one.